Good day, everyone. Good day, sir. I am Jacqueline A. Olarte, and as a continuation of the report of Mr. Cajoles, as part of the audit considerations, or should I say an additional topic for the audit considerations, I will discuss the key task and risk considerations. First is that tax considerations. We have income tax, withholding tax, create bill, and tax specialist. First is the income tax. So under the income tax, all the deductible direct costs which are specified in the RMC number 04-03, it should be properly taken into account, and also the proper allocation of costs and expenses between the income earnings of RBU and FCDU as required under the Revenue Regulation number 0411. It should be treated carefully under the income tax review, and also the cost of services where banks shall refer to those incurred directly and exclusively for lending and investment of funds, obtaining of funds from the public through receipts of deposits, trading of foreign exchange, and lastly other investments. Next is we have withholding tax. So the common problem in the banking industry for the withholding tax is the late withholding or upon payment, because it poses a disadvantage to the banks for this allowance of cost and expenses due to the failure to withhold taxes and the foregone interest on employee transactions without WTC or FBT, fail to file TTRA or the tax treaty relief application. WVAT is not applied on services of non-resident and industry practiced on GRT must all be considered. And next is the create bill. So this bill was not considered substantially enacted as of December 31, 2020, assuming that if it is enacted into law prior to the issuance of the financial statements and the provision regarding the lowering of income tax rate is made effective retrospective to 2020, such will not have an effect on the current and deferred taxes for financial statements, for the reason that it is a non-adjusting subsequent event, and also the significant effect of the changes, it should be disclosed if enacted prior to the date of issuance. And as also you can see, the audited financial statement tax is different or differs from the income tax return. And lastly is tax specialist. So in auditing banks, it is important to have a tax specialist for the reason that there are complex and complicated transactions in the banks. However, this does not relieve the management from the responsibility to review, and thus the review of the work of the specialist is a must. So in short, the management should should also see the work of the specialist. They have to do their job well. Next is the risk consideration. So there are some risk considerations that should be disclosed in the financial statements. So these are just some of the risks that I've found. First is the credit risk, which includes the concentration risk. We have liquidity risk, the reportational risk, the modeling risk, and we also have currency risk, price risk, and interest rate risk. And if we combine these three, it would be in total, it would be a market risk. And we have the operational risk, which also includes the regulatory risk and the legal and documentary risk. So this risk, we all know this in our auditing, so I don't have to explain it anymore. I'm just going to introduce to you the risk that is included in the banking industry that we are going to disclose in the financial statements. So there are also other considerations in the external audit of banks, which is centered in the Republic Act number 1153 or the FIST law. This law is intended to further assist the banking industry because of the increasing credit risk. This law will be an instrument for banks to clean up their balance sheet and to cope up with the current conditions. And also to avoid abusing this law, the requirements in this law are set very highly restrictive or highly standardized. So that is all for my report regarding the K task and risk considerations. Thank you for listening and God bless.